Hey, everybody, Brandon Cobb with HBG Capital here. Thanks for tuning in to today's episode. I'm very excited about today's episode. We're going to talk all about build to rent and some of the amazing things that I've learned about this asset class recently. In Q4 of 2021, I had 6 hedge funds call me wanting to buy all of our new construction inventory. I've never been contacted by a hedge fund before, and I'd heard about this build to rent thing. Wasn't really sure how it worked or what the big demand was for it, but that caught my attention. So I started going to a lot of these build to rent conferences, calling these hedge funds, trying to figure out what is going on with this asset class. Why am I getting contacted when I've never been contacted before? And I finally cracked the code and understand what is going on. You're not going to want to miss this. Before we jump in, if we've been having a one-way conversation, if you've been listening to these episodes and you've been interested in learning more about how you can have recession-resistant real estate deliver passive income directly to your bank account, set up a call with us. You can go to hbgcapital.net. We've got a Calendly link. We would love to learn more about you and how we might be able to help you reach your investment goals. All right, enough of that. Let's jump in. So I recently had the honor of attending a very high ticket event. It was very pricey. The people who put on the event wanted to make sure that the conversations that their attendees were having were very high level, and that was reflected in the ticket price. I won't go into how much I paid, but it was a lot of money. And there were a lot of build to rent guys there. And after speaking with them and really diving into their strategy and what they're doing, I now understand why this asset class is so hot. So I'm going to go ahead and just give you the secret sauce and not make you wait. I'm going to explain why it's so hot. And then we're going to talk about what's driving this demand. What are some of the fundamental reasons on why this build to rent phenomenon is happening? So the main reason that people are building all these build to rent portfolios is Wall Street is buying them at insane prices. That is what is happening. There are build to rent portfolios that are being valued. Build to rent, by the way, if you don't know what it is, it's imagine a community of like 50 to 200 or maybe even 300 homes, single family homes being built, but they're being rented. So it's like an apartment complex for single family homes. That is exactly what it is. So what is happening is Wall Street is buying these portfolios at a 2 and 3 cap. For all those who don't know what a cap rate is, it's basically a measure of how much money is being brought into an asset relative to how much money is currently invested in it. So you're making basically 2 to 3% on your money, which is not that great, but that's what they trade at. They're trading at 2-3 caps, and that's what Wall Street is buying it. And right now, if you're an operator and you can build a build to rent portfolio, you can build a build to rent portfolio for probably a 7 or 8 cap after it's stabilized. That's what most of these people are doing. Sometimes it's a 10 cap or more. And then you can sell it to Wall Street for a 2 or 3 cap, which means you make a lot of money on that spread. It also means that these build to rent portfolios are more valuable to Wall Street than they are individual consumers. There was a portfolio that sold in, I think it was Austin, Texas. I was talking with a guy on the market. He would have sold the homes for $380,000 to consumers, and he sold it to one buyer for $500,000 a door. That is insane. And this was what really caught my attention, because in my head, I'm thinking, wow, how great would it be to not have to do, especially if you're a smaller builder like us, building these 30, 40 homes in one neighborhood and having to deal with 30 or 40 different buyers and all the headaches and the agent commissions and the club, all this stuff. You just sell it to one person and it's a check. Sometimes they'll even pay cash for it. That caught my attention because now as a developer, you have multiple exit strategies. Your worst case scenario is going to the already undersaturated, undersupplied housing market and selling it to consumers instead if your deal falls through with one of these bigger guys. And I was amazed at this new asset class. So we're actually looking at selling some of our portfolio to these build to rent guys because it just makes sense. If they're going to pay me more money for it, it's going to be an easier transaction for everybody. And I've already got like a down payment or deposit from them. Oh my gosh, heck yeah. So now let's go into why. This is what I was trying to understand. what is this phenomenon? Like, what's driving Wall Street to want to buy these things at, 2 and 3 caps? It just doesn't make a lot of sense. Well, the first thing is the driving demand for this product type. You've got baby boomers and Gen Zers. Baby boomers, they do not want to own a home. They're old. They're tired of fixing stuff up, but they don't want to live in an apartment either. They like the idea of a single family home and the yard and everything, but they don't want to take care of stuff. They're able to pay a premium on the rent to make sure they get what they want. The Gen Zers can't afford anything. They're bunking with their buddies and their girlfriends going, hey, let's all split this single family home. We've got very affordable rent. We're all split the kitchen. And so you've got this new product that's satisfying this new demographic that's emerging on this economy where it's tough to afford things. So that's one thing. And as rent rates grow, if you have the same cap rate or the cap rate increases, then you make a lot of money if you're Wall Street. Also, what's been going on with inflation, when you print half the dollar bills that have ever been in circulation, you're going to get crazy inflation. Inflation means rising home prices. That means you make a lot of money. When you have these 20% price appreciations year over year, and you've got billions of dollars of assets in inflation-friendly homes, you make a lot of money. Wall Street's betting, hey, we just printed $2 trillion. I bet the value of the single-family homes are going to go up. That's another reason. They're looking for wealth preservation. If you have cash sitting in the bank account right now, it is being eaten alive by inflation and will continue to as long as we print money. Historically, the value of the dollar in your bank account is going to go down. That's why bread used to cost 4 cents. Now it's $4, right? So Wall Street is betting on inflation. They're betting on the lack of affordable housing, and the baby boomers who want a single family home but want to rent, Gen Zers who can't afford a place somewhere, to continue to just pour into this asset class. It's new, so there's not a lot of supply, and this is the reason why I got 6 phone calls from these people wanting to buy our inventory, because they're like, hey, we'll buy it from you at a 6 or 7 cap, whatever it would stabilize at, and sell it to Wall Street for 2 or 3, and we'll make a ton of money. So this was really interesting to me. There's a lot of money, very deep pocket companies and organizations and hedge funds are going after this build to rent product because the demand for it is there. The fundamentals in the economy for it are there. Traditionally, single family housing has always gone up, right? It's always gone up. It's going to take a dip just like everything else does. We're going to bounce back out of the dip and prices are going to continue to increase. There's always going to be a demand for these housing. And I like what they're doing. They're focusing on the more, they're trying to focus on affordable housing. I've seen them buy some not so affordable housing. In my opinion, I don't think a $500,000 house is that affordable, but what options do people have these days, right? Your supply chain is pushing prices up. It's taking longer to find a home. People need somewhere to live. Construction costs are increasing and getting passed along to the consumer. You have record low supply of housing. It's never been lower, especially for that first-time home buyer. So Wall Street is taking all these factors into consideration. They have weighed the fact that so much money is being printed, and they are investing heavily in this build-to-rent asset class. So hope you guys enjoyed this. Again, if you're interested in learning more about recession-resistant real estate, passive income to your account, reach out to us. We'd love to build a relationship with you. Till next time, guys, I'm Brandon. See you later.